Hello everyone, this is Xratios Investor. Please note that this video is for educational purpose, and please still do your own research. If you liked this video, please give me a thumbs up and hit the subscribe button. 3 stocks that I personally like a lot, and I believe that these stocks have major upside potential to grow. I hope that these stocks will help you to diversify your portfolio, so let's get started. Stock number 1. Baidu-backed streaming service provider, iQiYi, under the ticker symbol IQ. iQiYi is also known as the Netflix of China, and is looking like a smart buy at the current price of $19.70 as I made this video. Unfortunately for many, the streaming industry isn't exactly doing very well at the moment. iQiYi reached an all-time high of $44.20 back in June 2018 and have so far seen a drop of over 50%. iQiYi's price today is basically trading almost where it were when the stock first IPO earlier this year. Such should be expected from the nature of high volatility and fast movers stock like iQiYi. Comparing it to Netflix, Netflix peaked at $418.97 6 months ago, and has so far fallen down to $258, a drop of 38%. So what's the problem with the streaming industry? Is it overvalued? Is this dip a good opportunity to buy? I wouldn't put both into the same mix, as the decline of Netflix is largely due to missed earning and mainly disappointing subscriber growth back in July. Although Netflix's October earning report did show some decent numbers, but it only prevented the downward trend momentarily. Back to iQiYi. iQiYi's overall revenue rose to $1 billion, a 48% increase year-over-year, meeting analysts' expectations. There are about 4.2 billion internet users in the world, nearly 800 million of them are from China alone. Subscribers in iQiYi have so far rose quickly to 80.7 million, compared to 42.7 million subscribers back in September 30, 2017. The company plans to add more than 200 programs in 2019, which will include movies, animation, comics, and live streaming programs. Which proves that the company has the apparent platform to monopolize the China internet TV market. The future, revenue and numbers actually shows iQiYi's with solid earnings and amazing subscriber growth. Theoretically, the stock should go up, but the problem with this stock is the profitability, advertising revenue and the overall stock market performance. iQiYi's recent earnings shows loss of $457.3 million in the quarter, a loss of 63 cents per share, more than the predicted loss of 44 cents by analysts. Also, online advertising services revenue fell 4% due to the impact of the FIFA World Cup soccer that are mostly broadcast through cable rather than internet TV. iQiYi's continued significant investment and the World Cup broadcast played a huge role in the loss. I see this as a short-term issue, and I believe that the long-term growth fundamentals will remain strong because the content distribution revenue have grew 220% year-over-year. For me, this signal a buy, and I can see it rebound back to $30 when the company is beginning to show profitability and strong subscriber growth. The biggest difference between Netflix and iQiYi in my opinion is Netflix has shown profit, and iQiYi has not yet shown the results investors are looking for. I believe it is not difficult to love iQiYi as this stock is due for a rebound when it delivers the result in the next earning. With that said, you will want to do more research and take notice on their close competitor, Tencent Video and Alibaba's Youku. I was also looking at a few popular China stocks such as Alibaba, JD, Tencent, Baidu, and PDD. I think these are some good pickups except for JD. I believe that adding JD to your portfolio could be a dangerous mistake as there is currently not much motivation for investors to add JD in their portfolio, especially with the CEO's rape allegation. I think the media made the case out more than it should be, but I can still see a downward trend. I don't think it is wise to add to your portfolio until this clears up. Stock number 2, BlackBerry under the ticker symbol BB. I bet none of you expected me to be talking about BlackBerry. Yep, welcome to December 2018. As you all already know, BlackBerry is known as the fallen phone giant for the failure to adapt in the modern smartphone world. However, BlackBerry have slowly transitioned, or I should say fast-tracked into the development of software industry. Even then, BlackBerry is still struggling to generate meaningful profit as a software company. But the good news is that BlackBerry seems to be turning their fortune around, and I will tell you exactly why shortly. BlackBerry is currently priced at $8.67. Of the past 6 years, investors were skeptical about the company. Its quarter earning report on 2017 showed small revenues of $226 million, its lowest 3-monthly total since 2004, with an operating loss of $258 million. In the last reported earnings of 2018, BlackBerry earned 4 cents per share, better than the predicted estimate of 1 cent. Revenue dropped to $214 million, still better than the $208 million analysts expected. Earnings are estimated to increase by 137.7% this year, 21.23% next year, and continue to increase by 23.84% annually for the next 5 years. Investors will get their next glimpse of BlackBerry's third-quarter earnings on December 21st. Analysts are forecasting revenue to suffer a drop of 8.8% to $214 million in the next fiscal quarter. History has shown that shares in BlackBerry have gone up on 4 different earnings reaction days and are predicted to add 0.1% when the company reports upcoming earnings. But here's where BlackBerry excites me. The self-driving car industry and the software industry complement each other perfectly. With the increasing demand, and the strong growth in autonomous automaker industry, BlackBerry's QNX technology could serve as the leader in providing software solutions that enables the future of connected and autonomous cars. BlackBerry QNX technology have been placed in more than 120 million vehicles on the road today. With over 200 brands such as BMW, Chevrolet, Honda, Hyundai, Jaguar, Mercedes, Nissan, Toyota, Volkswagen and many more now use QNX technologies as the software basepoint for infotainment system that involves things such as digital instrument clusters, hands-free systems, 3D navigation systems and so on. What's more is BlackBerry has entered into a definitive agreement to wholly acquire Cylance, an artificial intelligence and powered anti-malware threat protection for $1.4 billion. The Cylance technology will immediately improve BlackBerry's portfolio, QNX and UEM in enhancing security protection. With the QNX, UEM technology and Cylance in the mix, Cylance will further enhance the verification and validation of software running on the infotainment system, preventing people from entering, hacking, data breaching and remote controlling into other people's car. BlackBerry's newly acquired technology will help in actively stopping virus and malware before it has the opportunity to breach your car and endanger driver's vehicle. I believe that BlackBerry will continue to grow quickly and play an important role in the autonomous software security industry, especially given how the autonomous industry is progressing. 3 years ago, BlackBerry QNX technology was inside 60 million cars and has now doubled at a quick growth rate of 20 million cars per year to 120 million today. I am confident that we will continue to see huge demand for this technology. Bear in mind that BlackBerry's QNX technology is only the second most profitable in its division. BlackBerry generate most of its profit from research and development, registering over 200 patents yearly. In other words, licensing fees are required for inventors to use BlackBerry's patent. All in all, it will be wise to take caution given how the technology industry is currently performing, but BlackBerry is a buy for me under $9 based on my speculation points. Stock number 3 that I have picked is CannTrust under the ticker symbol TRST or CNTTF in the US market. I decided to dedicate a marijuana stock as I realized many of my subscribers are into marijuana stocks. With that being said, I am well convinced that this stock has massive potential. CannTrust is one of the few underrated Canadian licensed producers in my opinion and has slipped under the radar for many people. CannTrust is currently priced at $6.41, up 15% since the legalization day, and its earnings on the November 14th led to a 30% rally before returning some gains. Recently, 4 major producers released its respective financial statements, and are currently worth much more than CannTrust. Unfortunately, Aurora, Canopy, Tilray and Cronos remains on a sell-off trend despite somewhat decent earnings. The good news is that CannTrust have sold nearly as much pot as Canadian cannabis rivals as of September and is on track for US listing. I do need to remind you that US listing will provide wider exposure, but that does not necessarily mean that it will skyrocket as we have seen with Aurora and Aphria in recent times. CannTrust currently has the market cap of $676.94 million, revenue has doubled to $9.52 million, 50% increase from 1 year ago. The company has sold a combine of 1,300 kilograms worth of wholesale weed and medical cannabis as of September. CannTrust has the capacity to grow 50,000 kilograms of pot, and is expected to grow 100,000 kilograms a year by the end of 2019. CannTrust also has a wide range of international market, and has shipped weed outside Canada. CannTrust's earnings showed promising sales figure, and is already well positioning itself in the recreational marijuana market alongside large rivals with 9 provinces supply agreements in Canada. Breakthrough Beverage has invested $9.2 million in CannTrust and will be the exclusive distributor of CannTrust's recreational marijuana products throughout in Canada. Breakthrough Beverage Group is a leading premium alcohol wholesaler in the US and ranks as the largest alcoholic beverage broker in Canada. This is a really good news for CannTrust investors. I believe that it will not be long until people realize that CannTrust is an undervalued company and is bound to reach $1 billion market cap sooner than expected. I expect the next earning report from the marijuana post-legalization result to reflect a higher number. CannTrust is already profitable, and with a market cap below $1 billion, it's easy to consider buying one of the cheapest Canadian marijuana stocks, especially if you compare the market cap per revenue with Tilray. CannTrust is only at 15.6 times in market cap per revenue, while Tilray is at 240.3 times. In other words, Tilray is certainly not worth at trading over 10 times higher than CannTrust does. That's all I have for this video. As always, please note that speculation caused people to pay no attention stock valuation consideration, so please still do your own due diligence. Subscribe here for more stock videos, and leave a thumbs up if you liked this video. Comment down below and what you think about my top 3 stock picks for December 2018. Till next time.